Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up, and if you want to learn more about investing, subscribe to this channel. Today I'm going to talk about a company that reported earnings this past week. That's Pinduoduo, ticker symbol PDD. Currently priced at $69.48 per share. Yesterday it traded at 14% higher than the previous day. After hours up 1.14%. Past year up 245%. Past 5 years up 181%. And it started trading publicly on end of July 2018. Scrolling down a bit, market cap is $46 billion. P ratio doesn't exist because they're not profitable, and dividend yield is 0, which means they reinvest all profits back into growth. So since it reported earnings, it was very positive, and it was also in line with how Alibaba performed as well, where it surged because people shopped online during these times. Currently, analyst ratings give it a buy, 79%, 9% give it a hold, and 12% give it a sell. Now, in terms of the earnings, actual EPS was negative 39 cents versus expected at 27 cents, which is, so actual is worse than the expected, but overall growth was positive. Now, in terms of their business, they operate as a holding company that engages in development, management of e-commerce platforms. So because they are an online business for e-commerce, they're doing very well during these times when people want to shop online, and that's probably the safer alternative than going in store. So taking a look at the actual earnings, these are the slides that were presented during the earnings call. So scrolling into their highlights, Q1 2020, you can see that the last 12 months year-over-year growth was 108% growth, which is huge. Last 12 months active buyers, 628 million, which is a 42% year-over-year growth. Now taking a look at their revenue, it's 44% year-over-year growth, and average monthly active users is at 487 million, which is 68% year-over-year growth. So overall, these numbers are very solid in terms of their growth. A lot of potential upside because of the potential growth. So you can see strong GMV growth, which is the gross merchandise value growth of 108% year over year. So you can see from March 2019 to currently, or this past March 2020, 108% year over year growth from 557.4 to 1,157, which is a huge jump. And these numbers are in RMB, their currency in billions. So it's driven by rapidly expanding user base and spending per active buyer. So there's more users on their platform, as well as per user, they're spending more. So you can see active buyers, you can see that's 42% year over year from last year's March, 443 versus this past March, 628. And looking at the annual spending per active buyer, they're spending more as well, 47% year over year from 1,257 to 1,842. And last but not least, monthly active users also grew 68% year over year from 289.7 to 487. And this is in millions. So that's huge jump, huge growth from year to year. Now taking a look at the revenues and monetization rate, 44% year over year from last year, 2019. This is in millions as well in their currency, 4,545 to 6,541. Now in terms of monetization rate, in percentages, last 12 months, you can see that for March 2020, 2.8%. Now taking a look at their cost structure, so cost to generate the revenue, This is a non-GAAP in their currency in millions. So you can see that percentage of revenues, 28%. So Q1 20, 1,821 million RMB. And in terms of sales and marketing expense, percentage of revenue for Q1 2020, 108%, and that's 7,064 million in their currency. Looking additionally in their cost structure in terms of their general administrative as well as their R&D expenses, you can see that the general and administrative expenses is only 2% of revenue at 118 million in their currency, and then R&D is at 17%, and that's 17% of revenue at 1,124 million in their currency. Profitability, so this is operating loss. You can see that, as I mentioned, it's not profitable. Percentage of revenue, negative 55%. It's not looking good in terms of the profitability. You can see that it's trending lower and lower. They're losing more money. And in terms of net loss attributable to ordinary shareholders, negative 48%. So profitability story, it's not looking good, and it's not looking any better either. But it's more of a growth story. You can see that their user base as well as expenditure or spending habits per user is growing, so that's good. Hopefully as more users come on this platform, then they'll become profitable. Now in terms of balance sheet, ending cash, cash equivalents, and restricted cash. So cash is something you want in a business, especially during these times, so they can sustain their business. So you can see that March 31, 2020, 32,499 in million. So that's a little lower than last quarter, just by a bit. But it's good that they have this amount of cash in their balance sheet. And in terms of ending cash, cash equivalents, and short-term investment, March 31, 2020, they have 42,000 million. So that's all for their slides this past quarter. As I mentioned, it's more of a growth story, more users, each user spending more, they're acquiring more users, they're growing. But in terms of profitability, it's not profitable, and because of that, I'm not investing in PDD. That's all for this video. What are your thoughts on this company? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. See you in the next video.